All right, we're going to kick it off. My name is Emmy Sauls. I am the Director of Marketing here at LenderLogix. Thank you for joining us as we talk about how mortgage operations teams can improve performance and ensure compliance. We're going to talk a little bit about that and then go through a deep dive of our fee chaser solution and what that can mean for mortgage lenders. We do have Patrick O'Brien on the call. He's going to be going through the demonstration. And just some quick housekeeping notes. If you do have any questions through the presentation, go ahead and throw them in the chat. If it pertains to the group at a large scale, we'll try to answer them throughout the call. Otherwise, we will follow up after the webinar and make sure that we answer your questions. So without further ado, Pat, take it away.
Thank you, Emmy. I'm Patrick O'Brien. I'm one of the co-founders of the company here. So we're talking about how mortgage operations teams can improve performance and ensure compliance. It sounds like a lot of fun, doesn't it, Emmy?
Absolutely.
Absolutely, it does. Just real quick, a little bit about us. LenderLogix, we look at we look at parts of the origination process, and we build really slick pieces of technology that address very specific parts of the origination process. So the solution that we're talking about today surrounding compliant fee collection is a piece of software that we sell. We sell a piece of software that allows loan officers to issue dynamic pre-qualifications to borrowers and realtors, so that borrowers and realtors can update pre-qualification letters in real time within parameters loan officers set for them. And we create other various pieces of software that integrate with loan origination systems along the sort of the point of sale spectrum. So we're super familiar, with these specific problems that are encountered in the mortgage space. And one of them is that we see consistently among clients that we do business with is fee collection. And what we find is most lenders who do collect fees do so with do it with a relatively manual process. I mean, we go from folks that are actually manually collecting checks from borrowers all the way through lenders who are getting credit card numbers written on forms and things like that, which then people are processing on the back end. So fee collection is just one of those aspects, a necessary aspect of the mortgage origination process, but one that's sort of riddled with a few pitfalls. So the solutions we offer primarily focus around PCI compliance. So when a lender is collecting money from a borrower upfront, whether that's an appraisal fee or extended rate lock fee or lock and shop fee or credit report fee or whatever the case is, we want to ensure PCI compliance. And one way to avoid that is to avoid getting the credit card information and ingesting it into the system yourself. So that's one thing that we automate so that you actually never see the credit card information. Automating the collection process decreases the turnaround time, right? So we have some lenders get checks from borrowers, some lenders that get credit card numbers from borrowers. And the act of actually processing that payment, whether it's depositing the check, whether it's processing the credit card by going into a virtual terminal and entering the information in there and dealing with it if there's an incorrect card number or the card's declined or whatever the case is. So just getting rid of turnaround times out of fee collection, just let's get it done right out of the gate. The internal process that's involved with processing credit cards or depositing checks when it comes to those upfront fees, just the manual process of getting the fee, processing it, updating the loan origination system, uploading a receipt to the e-folder, all that can be automated end to end and just get rid of all that sort of labor intensive overhead that's associated with the collection of upfront fees, while at the same time creating a good experience for the borrower, right? Because this is early on in the process, and calling borrowers and getting credit card numbers over the phone from them or asking them to type it into a form, or jot it down onto a form that's being scanned. No, this, we're in 2022 here, and there's certainly more elegant ways of doing that. And kind of a sneaky benefit that goes with automating fee collection is increasing your pull-through rate. Every loan officer knows that time kills deals. Time just kills deals. So the sooner that we can get a financial commitment from our borrower, increases the likelihood that that deal is going to matriculate through closing. If a loan officer is taking a phone application and going to collect a fee at a later time, that's just going to increase the likelihood that some busybody coworker or uncle is going to get involved in the transaction. Say, no, you should talk to this person, talk to that person. If we can get a fee from a borrower at the moment of application, from the minute that they signal intent to proceed, that's only going to increase the likelihood of that deal pulling through. So I just want to tell a quick sort of compliance story, and really kind of the genesis for this particular product. We were selling software to a client of ours, a different piece of software, and that client approached us several years ago and came to us and said, look, we have this problem. We had an audit with our regulator, and one of the things we got banged up on was we had payment card information from borrowers in our file. So what that lender's process was is loan officers were getting credit card numbers from borrowers, and they were getting it on a form. So whether the loan officer typed it into the loan origination system, whether the borrower wrote it on a fee collection form, it was just part of their doc package. And when that and what would happen is then an operations, whether it's processor or whatever the case is, would then get that credit card information, run it through a virtual terminal. So that's just entering the card information through a terminal, processing the card so that it's charged, and then would take the receipt and send it to the borrower, or upload it to the e-folder, mark the fees as paid outside of closing in the loan origination system. And what happened is the regulator came in, was auditing files, and saw these pieces of paper with all this card information on it. And the lender retained it, obviously, because they wanted to retain it to prove that they kind of had the ability to process the fee. But the regulator said, you can't have that. You can't have this payment card information floating around in the file. People, anybody could look at this and get the borrower's payment card information. So the client approached us and said, hey, what can you do? Like, what could we do to automate this thing so that we're still collecting the fees up front, and solving for kind of the compliance nightmare that goes with that, along with just the overall experience, both on the lender side and the borrower side. So we built this product, which I think stands as sort of the best in class fee collection solution that's really out there. And we can handle a multitude of fees. So whether it's appraisal fee, application fee, condo docs, lock and shop, extended rate lock, we kind of cover the gamut because of the integrations that we have with the loan origination systems. We're sort of able to do a lot. So there's a couple screenshots here, sort of kind of like what the borrower experience looks like, but really what I'd like to do is just kind of like show you end to end, really what it looks like. It's pretty simple. And that'll kind of fill in the blanks in terms of what, loan officer sees, borrower sees, that type of thing. So generally how the process is kicked off is from within the loan origination system. Let's assume that we have an application, we have intent to proceed, and there's some subset of fees that we want to collect upfront versus at closing. We do encounter lenders sometimes that are just collecting all fees at closing. But I think, kind of when you look through the reasons why loans fall out and oftentimes the expenses that are incurred when loans fall out, the idea that collecting fees further into the process, the minute that borrower signals an intent to proceed and we have a loan application, makes a lot of sense. So again, how the process is kicked off is generally from a form within the loan origination system. So we have a screenshot in Encompass here. And basically what we're doing is this lender is picking up a couple of fees off the itemization within Encompass that they want to collect from their borrower. So in this situation, let's call it appraisal and credit report fee. Those things are pulling directly off our loan estimate. So how the process starts is the loan officer basically, or the processor, hits a send button, and that fee request is going to go to that borrower the second that loan officer hits the send button. We do also have clients that automate it end to end, which means the loan officer or the processor don't even have to collect a send button. When certain loan activities within the loan origination system are complete, so for example, it's a loan application, we have intent to proceed. When that loan is submitted, the request goes to the borrower automatically. So we do have the ability to kind of customize that experience depending on what each lender wants. Again, a lot of loan officers like to have some level of control over when a fee is being requested from their borrower, and that's why the send button exists. But we do have some clients that just automate it 100%, every single time a request is going to go to that borrower, as long as there's not like a property inspection waiver or something like that. So in this situation, our loan officer is going to hit send. And what I'm going to do is just kind of play like a quick video to show exactly what the borrower experience is. So I'm hitting this send button. And what it's doing is I'm just going to pull open a quick video here. That's going to show what our borrower sees. So our borrower gets a text message there. Hey, please click this link to pay Capital Bank and Trust your fee for 760 Seneca Street. So the fee request is, referencing the lender, referencing the subject property, the particular fee that's being paid. So they know it's not spam. The borrower clicks on that link and they're met with a simple page and your credit card information to pay your $545 appraisal fee for 760 Seneca Street. This language can be customized. So we customize this from lender to lender, and some lenders have, stronger language that they want the borrower to attest to. For example, this fee is not refundable if the appraisal has been completed, et cetera. But basically all our borrower is going to do is they're going to enter their card information on their device. So we're actually never taking possession as the lender. We're never taking possession of that card information. It's being run in real time. So as that borrower enters that information and hits the pay button, it's actually processing the card. We have an agreement with Fiserv, which is one of the primary merchant services providers out there. So when that borrower hits that pay button, it's processing the card right now. So when that borrower gets that message, hey, thanks for completing your fee, those fees are now on hold on that borrower's credit card. So if it were declined or an incorrect number, the borrower is dealing with it. They're getting that messaging on the screen. They know the fee did go through, just like any online purchase. They're going to triage that, whether they use a different card or call their card issue or whatever the case is. But certainly we as the lenders aren't having to deal with it if it's an incorrect number or the card's declined or something like that. The borrower is dealing with that in real time. So once that fee is paid, the borrower goes through that activity. I'm just going to go back to my presentation here. And I'm just going to skip a couple of these slides here because we showed it in the video. So once that fee's been processed, the borrower is getting a receipt immediately. So the borrower has a receipt from that lender to say, hey, your $545 appraisal fee has been paid. We're also notifying the internal parties at the lender. So whether that's loan officer, whether that's processor, opener, appraisal team, whatever the case is, we can notify anybody internally, hey, this fee has been taken care of, this fee's been paid. We're also pushing information back into the loan origination system. So we're pushing back timestamps. When was the fee requested? When was it paid? What was the dollar amount? So in the event that the lender wants to, write some particular business rules around the collection of fee, you can do that. So for example, loan can't be submitted to underwriting until fees collected or something like that. Those are all things that you can kind of work into your business process. We're also pushing back, we have the ability to update the fees on the loan estimate is paid outside of closing once those things are completed. So really kind of any of those manual things that are generally done as part of processing fees, those things are all done automatically. Also pushing a receipt into the e-folder. So, anything, the transaction ID, the cardholder name, IP address, any language that the borrower needed to attest to when that payment was made, all that stuff can be put on the receipt. It's pushed in the e-folder automatically. So there's no manual work that's going into actually kind of updating the loan origination system. Anything that needs to get done can be done automatically once that payment's been received. Basically, how payments are processed is it's similar to if anybody processes fees using a virtual terminal today, it's kind of the same thing. So what happens is on a given day, all the fees are batched. So all the transactions that are paid on a given day are batched and deposited next business day to that lender's account. So it's basically just linking the merchant services account to a checking account, and all the fees are processed through there. A primary advantage of a service like ours is that when those fee requests are being created for each borrower as they're paid, we're passing through with these fee requests the loan level information. So folks on the accounting side of the house who have to reconcile those transactions and say like, okay, which of these, which fee payment, what goes with each loan, we make that process super easy because we're able to pass through those loan level elements with each payment. So somebody from the accounting side would be able to log in, pull a report of all the fees that were processed yesterday, know which loans are associated with those fees, know what the distribution of fees that were charged. So for example, if we collected $600 from a borrower, $500 for an appraisal fee, $50 for a credit report, and $50 for a flood cert, we'd be able to know the itemization of those fees within each payment that was made. So it makes the reconciliation much easier than what happens today with that manual processing. In the event that we need to dive into a particular particular fee that was charged to a borrower, if we need to issue a refund or void the transaction, we're able to do that. We can just log in, punch in the account number, the loan number, the LOS loan number, and locate the transaction that way. So we're not having to match up. We know which loan is associated with which fee payment. So it makes it easy in the event that a refund needs to get issued or there needs to be some further investigation. Makes it super easy. Fee chaser by the numbers here. So just some statistics. Lenders receive on average 95% of the payments within the first 24 hours of the payment being sent. And one of the things that we do is we also build into the fee request process at the lender's request is generally some type of notification back to the borrower if a fee payment is outstanding for X number of hours. So usually what we're doing is we're sending kind of follow-up reminders to the borrowers that the fee is still outstanding, after 24, 48 hours. And then sometimes we're reporting back to the lender, hey, there's been a fee outstanding for 72 hours. Maybe somebody wants to give this borrower a call or something like that. But overall, 95% of the payments are made within 24 hours. Real interesting statistic is 60% of the payments are made within 5 minutes. So borrowers get these things, 60% of them take care of it within 5 minutes. And I think kind of that's something really important to think about when it comes time to like, okay, how are we making sure that we're locking borrowers in as early in the process as possible? Having this type of technology, being able to request the fee payment literally while you're on the phone with the borrower and have them complete it, locking that borrower in as soon as possible. Another interesting statistic, 80% of all the payments that we see are made on a mobile device. So we do have the ability to send the fee requests via text message and email. It can be one or the other. Usually if we have a cell phone number and an email address, most of our clients have send both. And what we see is 80% of all those payments are made on a mobile device. Borrowers are getting those payment requests via text message. They're eager to get the process rolling and they pay that kind of in real time. And what our lenders tell us is they collect about 20% more fees with Fee Chaser versus what their existing process is. And we went through something with an existing, with a client where they were collecting on average before before they had our software, they were collecting about 80% of all the loans. They were collecting about 80%, which isn't terrible. But 20% of the time, it's like, loan officers, telling the borrower, we'll just collect it at closing, or, the borrower was going to call me back and give me a card number. They never did. I didn't follow up, whatever the case is. We see now that lenders collecting 95 payments on 95% of the loans. And when you see, a typical fallout rate of maybe 10% of all loans, that's material. I mean, to be able to have those upfront fees on 95% of the loans instead of 80%, when it comes time for the fallout, I mean, you're talking tens of thousands of dollars in, appraisal fees that you were able to recoup versus loans that, may have fallen out and we didn't collect those fees. And we all know appraisal fees aren't cheap. So yeah, that's, those are kind of the material statistics. Again, one kind of important undertone that I think is important to stress is how collecting those fees in a quick, easy, simple way as early in the process as is possible. Again, many clients just doing it right when they're on the phone with the borrower. So loan officer's talking to borrower, loan officer clicks the button in real time. Hey, you just got a link. Go ahead and on there, complete that, pay your fee so we can move ahead. Especially in this environment, when we get that borrower locked in with a commitment, with a financial commitment as early in the process as possible, is only going to increase the likelihood that that deal is going to matriculate through closing before, again, some busybody coworker or neighbor starts trying to encourage the borrower to go elsewhere. So, the benefits of the automated fee collection fall across the spectrum of not only just, the increased pull through, obviously, recouping potential lost fees, and then just the operational efficiency that goes with automating that process instead of kind of having those human beings doing manual tasks to kind of update those fees. It's a simple product. It works really good. And I've talked a lot about it. So Emmy, is there anything that that you'd hoped I'd cover that I didn't, or what are you thinking there?
I think you covered it all. I do have two questions though that were asked in the chat. Just figured I'd bounce them over to you and let you kind of elaborate.
Sure.
On what
Sure.
The first is, are credit card payments the only way to pay? Are Venmo and Zelle options?
Those are on our roadmap, but currently it is just credit cards. But I can tell you that there's some, we're actively that's on our roadmap and likely something that you'll see. But as the product exists currently, it's just the credit cards, Visa, MasterCard, Discover, Amex, that type of thing.
Cool.
Good
question. I have
question.
another question from Jason. Is the link that is sent to the borrower something that we can extract and send through our own method, i.e. an existing POS?
The answer is yes. So we do have some clients that do, that do have similar processes to what was just proposed there. So basically what can happen is when that fee link is generated for that borrower, we can essentially just like put that link within Encompass. And usually what you're finding is that's the mechanism by which to push it to another system. So whether it's a different texting platform that you use, or CRM, or point of sale, or whatever the case is, we generate that link and it can be sent, through the automated means that we have, that we can configure, or it's something that we can just generate that link and have it, posted elsewhere by, into a different piece of software or whatever to be delivered to the borrower. That's, we've done some of that. So those are usually kind of the things that, like, once we understand a little bit more about what somebody's business process is, we can kind of dig into that stuff a little bit more.
Cool. Well, that's
anything
all.
else you want me to cover?
No, that's all I had in the chat.
Okay. Well, it's a again, it's a relatively simple process. If you think about all the operational pieces that go into a kind of a fee collection process. We've automated it. We've customized it, configured it. So there's not too much we haven't seen out there. So I'd be confident if kind of want to have an individual discussion about, hey, what are you collecting? What are the different circumstances? We collect an appraisal fee up front, and then sometimes need the ability to collect HOA fees 2 weeks later. We've seen it, we cover it. Let's have an individual discussion about kind of exactly what you're doing, and we can kind of tell you how our business process can fit yours, because that's really the name of the game, is automating everything in order to make it work within your shop. So if you'd like to kind of have those discussions, personal demo, email us, scan a QR code, any number of different things you can do. But yeah, fee collection for the win.
Absolutely.
We good, Emmy?
We are good. You killed it.
All right. Well, thanks for joining us. If any questions, this screen can kind of tell you where to find us, and we'd be happy to talk to you individually. So thanks a lot.
Yeah, thanks for joining, and enjoy the 30 minutes we gave you back in your day.
All right. Take care.
Bye, guys.